We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the Vietnam War. The government has been getting bigger.
What is up, everybody? It is me, TA Tim. I am hosting for today's show. Jebb has the day off, so get him some rest. But welcome to this amazing show. It is the greatest crypto show on all of YouTube, at least on the western side of Gainesville, Florida. That's guaranteed. I would be very surprised if anyone in that region outdoes us. But we are so happy to have another show for you guys today. We've got a lot to talk about here because unless you guys just woke up and haven't checked the charts in the last 72 or 80 hours, we've been crashing. This Bitcoin crash is a little bit of a testy zone. We weren't quite sure we were going to dip this low. We technically last night dipped below 21,000, hitting as far as 20,900. The question, though, is why? Why did we dip that far? Why did we do it this fast? And is this the bottom, or do we have more pain to go down? We're going to discuss that and so much more in this show, covering not only the technicals, but we're also going to talk about some fundamental news pieces that might have been the reason for why this happened. Of course, we have the Fed announcement coming out tomorrow. We already know the inflation numbers. We found those out last week. But what will the Fed do, and how will Bitcoin respond? That's what we're going to cover in today's show, and a whole lot more. But I want to throw it to two of my co-hosts. I think they come up at the same time, but I got Smay over here sitting with the technical director desk, and I got T-Shroom sitting at Jebb's desk filling in. How are you gentlemen doing this morning?
Swimmingly, better than I deserve.
Ooh, you added a word in there.
He added a word.
Good verbiage.
Thank you.
I'm doing good, guys. I had a good night's sleep last night, but the Celtics also lost, so that was, you win some, you lose some, as they say. But yeah, I'm doing good. Back to you, Tim.
Back to me. Well, guys, as we jump into this, make sure you smash that like button. If you're not subscribed, thank you so much for joining us this morning. Consider hitting that subscribe button for daily content updating you on what is happening in the world of crypto. We cover a lot of Bitcoin, especially right now, because it seems like everything is following Bitcoin. However, we're going to talk about here in just a second. There is some different altcoins that have some big movements that Bitcoin doesn't seem to be following. Bitcoin's lost some dominance to them. But again, if you want daily information, make sure you subscribe to the channel. Let's go ahead and go into our market polls here really quickly. Smay, don't give me that look. We're going to get there here in just a second. Technical director getting on my butt. I know what we're doing here. I got the flow. Trust me here, man. We got this. All right. We're going to go to the market polls here real quickly. As I said before, we lost a little bit of dominance here. Bitcoin did down to 45%. Not really down that much more, but it seems like a lot of altcoins are gaining the space. As you guys can see right here, Bitcoin is down over 4% in the last 24 hours. Again, unless you guys just woke up in the last 72 hours, you guys know that already. Ethereum, not really that big of a jump right there, but technically Ethereum in the last 24 hours is in the green, but we're going to talk about that here a little bit more in the technical analysis section. What we do have, though, is Cardano is up 13% in the last 24 hours. So is Solana. XRP up almost 2% there. In the last 24 hours, though, we did have some big movers. So for anyone investing in Helium, you're up 23%. Great job there. I know we're talking to T-Shroom. What does Helium do again? What is that project kind of serving?
Yeah, so Helium is a project that is seeking to bring internet to the world and in a new way. So it's had a lot of pitfalls. Their currency has gone down precipitously, and not just from this recent crypto bear market. It was going down quite a bit, and also the mining rewards that you were going to get through those Helium miners, those have gone down quite a bit. And Jebb covered that a couple of days ago, but it hasn't looked good. Now, they have released some new, protocol that I think may actually improve things, but I'd say overall I'm steering clear of Helium for now until it really re-engages its audience and captures new attention and starts to really look a lot better than it does now.
Yeah, so you're saying it might be a good time to take some profit if people were investing in a trade over there on Helium. Other projects we have that are up today: Phantom is up 15%, Kadena is up, Gala is up, Quant is up. Of course, we already talked about. Look at the Chainlink is up. We already talked about Cardano. Although, why is Cardano not? Right there. Cardano down here, 13%. I don't know why. They haven't updated their thing because they usually do this in rank order. But they got Chainlink up there. Maybe that just changed. Chainlink is only down to 12%. Either way, though, the biggest losers of the day, we have Monero. Funny story about Monero. I might talk about more later this week on Between Two Coins. We met a guy in Texas that his entry point into crypto was Monero, and his story was a little bit crazy. Bitcoin, though, that's, in the top 3 of the biggest losers the last 24 hours. Never good for Bitcoin, but it's good for the rest of the space that we have some outpacing, we're getting some dominance back. Altcoins are still holding their own, although we're going to continue to watch that dominance probably go to the upside for Bitcoin. But before we jump into technical analysis, there's a good story here that we saw this morning. Not really crazy. I think a lot of you could have done the math on your own, but for those of you who maybe did listen to this, those of you who got in when Matt Damon commercials come out, you have lost this much money. This article talks about how right now, I'm not going to read every bit of it, but it talks about if you had invested when Matt Damon's commercial first came out, if you had listened to his advice, you'd be down 63% in the crypto space. And it's going to take on Bitcoin at least 170% rally before you get back to breaking even. That's pretty crazy. Again, it was a fun commercial when it came out. But yeah, those who listen to it, they are in the red. I'm sure that they're feeling the pain. Either way, that's what's happening in the market right now. We're about to jump into some TA, but I do want to give you guys a word from one of our sponsors. And I want to thank them so much because it is because of our sponsors that we can continue to come to you guys day in and day out and give you guys information that you need. So a big shout out to Hedge. And Hedge is actually really, really cool. We've talked about this on the show before. When we're selecting our sponsors and our relationships, we do a lot of digging into what they are, who they are, can they actually help our audience? Because we don't want to just make money from them to be able to run the show. We also want to help you guys invest in your future. And Hedge is super cool, especially for anyone out there who loves to DCA. Hedge is a protocol that actually allows you to convert your W2, or at least a portion of it, into Bitcoin, Ethereum, Litecoin, whatever you want to do. It will allow you to go ahead in a seamless transaction, convert your pay through automatic withdrawal into crypto. And I'm sure that you can do it not just all 100% of your check, but you can do a percentage. You can do 10%, 5%, whatever. And in that case, you don't even have to worry about taking your hard-earned money and then worrying about the tax implications of converting it into Bitcoin. Rather, you can set it up from your job so that you are paid directly in crypto. This is something you absolutely want to have. It's definitely something that I'm going to be getting us looked up for, or signed up for here at this company because of how cool it is. And again, this is the perfect time. I know a lot of people are scared. A lot of people are wondering where the market is going. Guess what? The best time to DCA is when the price is low. So if you do not already have a hedge working for you, you're going to want to get it. Make sure you sign up with our link down in the description below if you want to use that today. But again, thank you to Hedge for sponsoring this show. Let's go ahead and dive into some technical analysis. Smay's giving me a look. Are you approving? Do you like what I'm doing right now?
After green names.
Oh, green
hey,
names. Well,
everybody.
it's not on the top.
I thought it was your system you came up with that we do it after the ad. So I was just, I was just letting you.
You got to put it on the dock.
But here we got Elliot Locke, Crypto Set Guy, Sultan of Salt, Groovy, Matsy, Grand Roofing Incorporated, Corey, Elliot Locke. Let's see who else we got here. Siobhan Golay, Mike Markle, Dennis Pizarka. Oh, lots of a variety of names. Crypto Set Guy, Win Peoples. I love all of you guys. You guys are the best. I just wanted to shout you guys out because I love you. And you guys, your names are green, like the Celtics, and I think that's going to have them rally and win in Game 6. So, anyways, back to you, Tim.
Absolutely. Again, that's another reason we're able to come here day in and day out. Thank you so much for everyone who does have those green names. If you guys are watching on a computer, you know what we're talking about. If you're on a phone, you have no idea what we're saying green names. Phones don't show green names. But those green names represent our members, our YouTube members who support us day in and day out. We couldn't do this without you guys. We love you so much. Thank you for your continued support of our channel. But let's go ahead and go to the chart now. Smell, you on my screen? Yep. Boom. All right. So in case you guys joined on the show, even while we were going live here a little bit ago, we were back below 22,000, but we're back above. Yeah, I remember when we went live, I was looking at the price. We were as high as 22.4, back down now at 22,250. But here is the interesting thing we're going to cover for today. And we're looking at what this crash is all about. Why did it happen? And we're going to start with the technicals here, and we'll get into the information of why we think it is crashing and what we think is happening next. But let's look at a couple different things and kind of analyze back from the beginning what we've been talking about over the last couple of weeks as to where we are with the price right now. So we are below this level of support right now. That's okay. We talked about this line yesterday. For those of you who cannot see right now, this is a line that used to be a level of resistance back at all-time high in April of 2021. And we used this line as resistance again when we had a little bit of a relief rally before that massive dip back in May. But of course, we then crashed. And then during our rally, if you guys remember, we didn't just shoot straight up to 69. We actually had a little bit of a wrestling point. And you're gonna notice we kind of wrestled with this line. We bounced off of it, came back down. We broke through it, came down, used it as support, broke back through it, used it as resistance before finally breaking through, going back up to 69,000. So this point was really significant even back then. But you're gonna notice as this line continues, that's what we encourage you guys when you're doing technical analysis, make sure you keep in mind points and lines and trends that are in the past and how they're correlating today, because we have used this line another 1-2 times with our wicks on the price, and now we've broken through it. We're hovering right below, but remember, trends are not perfect. It's not this perfect point. They're more like zones. So I still believe that this level is significant. And if you're wondering why this level is significant and why we're paying attention to it so much, is that currently we're in a downward or a descending trading channel. Now, descending trading channels, I don't like them as much as falling wedges. Falling wedges way more often break to the upside, but so do descending trading channels. The problem is, though, with falling wedges, you can, because it's capitulating, because it's coming together, you have a better indication of when that point's going to happen. Versus trading channels, they can keep going back and forth and back and forth. But I do believe we're getting close to a point where we're going to see at least a rally in the next couple of months back to the level of resistance. We might dip back down one more time. We'll talk about that a little bit more. But right now, we are hovering right at that support level here. That has been a key level, a key trend for the last year. We're not just talking about a couple of months. This trend has been significant for over a year. A couple other things we want to look at here. And I told you guys yesterday, the price continued to go down, but I knew that we need to be having some sort of relief coming very soon. And I'm going to show you why here on the daily chart. I'm even going to go out to the weekly chart and I'll show you a different couple of things. So the TD sequential is not as significant here on the daily chart. Right now, we just have a green 5 flashing. That doesn't mean that much on TD sequential. Again, you're looking for 8s and 9s. 8s and 9s on TD sequential show us reversals. So right now, as far as the daily chart, that's not that significant, but we are massively overextended to the downside on Bollinger Bands. Doesn't mean we automatically have to rally back up. We can stay overextended on Bollinger Bands for a little while, but the longer you stay there, notice that the upside is still going to the upside. This is increasing our volatility, which when you have a massive dip like this, I'm not saying every time it happens, but you often can see an explosive rally in the opposite direction. So for example, if you're moving to the upside, sometimes you have a massive drop. So this is something to keep an eye on with our Bollinger Bands. If I go out to the weekly chart using these same two indicators, you're going to see we do have a 9 flash on the weekly chart. We are overextended on the Bollinger Bands. We are sitting right there at the support level. We are super low on the RSI. There's a lot of different things showing us that this is nearing at least a local short-term bottom at the moment. So even on the weekly chart, we are seeing some positive signs developing here in technical analysis. But let's go back to the daily chart real quick and let's cover one more thing. This massive spike in volume along with this low level of RSI. These are also signs that potentially we could be bottoming, but here's the detail about this. And you guys have been noticing, I've been talking about volume a lot. It's because in my studying and my research and as I'm trading, I'm noticing very, very significant points that happen with volume that you should be paying attention to. And really, in all reality, what is volume representing for us? It's representing an increased amount of trades happening. Why is the volume peaking? Because we don't just have bears selling, we have bulls buying. And oftentimes this peak in volume, similar to what we saw here the other day, or not the other day, a couple weeks ago, because this is the daily chart, is signaling the beginning of a reversal. Now, pause right here. I do think that we're going to see a reversal. I do think we're going to see a little relief rally come within the next couple of days. The problem, though, is that remember back here, I told you guys with this peak in volume that I fully expected due to this peak in volume, we were going to return to these levels, if not lower. Sure enough, that's exactly what happened. I did think we were going to go a little higher first, and we'll talk about that here in just a second, why we didn't. But I did expect us to come back down low. However, what I was hoping for / wanting was us to come back down with low volume. Low volume on these dips actually signifies to the whales, the institutions, it's time to go ahead and spring and go back to the upside. However, that's not what we have. So good news, volume's high. We're probably seeing a reversal coming very soon. We're overextended. Bad news, there's a lot of supply and demand down here that I'm guaranteeing you the whales and institutions are looking at as a juicy spot to come back and get some more. They want to gobble as much supply as possible. So right now they're seeing this, hey, we can buy right now, we can push the market, we can take profits somewhere back up in this region around $30,000, 34, maybe even get up to 36 still, we'll see. But then they can dip it right back down and gobble more supply before we finally hit a bull run, maybe within the next year. This is something you as the retailer, you want to pay attention to. Do not be fudding out or FOMOing in. Make sure you're paying attention to the technicals. You can't always predict exactly what's happened, but you definitely can go back and look at what has happened, and you can use hindsight to help predict the future. And right now, what I'm seeing on the charts based off of this metric, I do expect this is not the time frame bottom. Maybe it's the bottom in price. Maybe we don't get back down all the way to 20,900. Maybe we go lower. That I don't know the answer to. But what I'm seeing right now on the charts, me as a trader, me as an investor, I do not think that we are about to rally into a new all-time high, a new bull run. I believe we're going to see a rally where we come back up and then we dip back down. The other reason I believe that is I've talked heavily about this, and I haven't talked about it on the show because I haven't got to host in a while. But you guys know that I love me some RSI divergence. And I talked about this back in January, how when we hit this bottom, this RSI bottom, that was nice and juicy, but we were going to come back down again. Now, I changed my mind. I got a little fudded out of my own information. When we started rallying above 42,000, I made the mistake of going against my better judgment and saying, oh, maybe we don't have to. Maybe this was a special situation. Even though every other time in the history of Bitcoin, except for one, and that was the black swan event of the pandemic, every other time we've had bullish daily RSI divergence. But maybe we're not going to have it this time. Well, sure enough, we definitely set that up. And right here, we set up some bullish RSI divergence. And this, to me, was a very good sign. Hey, we could have a reversal here. But here's the key. What you do need to remember, because some people have asked me, Tim, do we always reverse at bullish RSI divergence? No, that is not the case. We don't always reverse at daily bullish RSI divergence. So not every, I'm going to slow down here. Not every RSI divergence means you're swinging back to the upside or swinging to the downside. That's not the case. But with the exception of one time, every single true reversal did come with RSI divergence. So they are correlated, but they are not the same. And what I'm looking at right now is technically speaking, we do have still a higher RSI on this dip than we did back here, but I don't like it as much. This isn't a clean line. Sometimes you do see triple tops, triple peaks, but we've broken below this peak line. We're not really hovering right there. I think that there's a potential that we need to scrap this. This bullish RSI divergence right here is not the one we're looking for. I believe there's a potential that what we might see here in the future is a new RSI divergence, and I'm going to draw that for you real quick, and I'm going to pretend to predict the future right here and give you an example of what I'm talking about. This peak right here, this is a bottom. That's really low. We're at 23. I believe that what we could see happen is we could see the RSI start to bounce back up and come back down to around 30 before we see a rally in the same boat. And that's not the time frame I'm looking at. I'm just drawing for you guys so you guys can see. We'll see a rally happen, maybe even get up around 30. Oh, gosh. Cancel. My hand slipped and I messed that one up. We're going to see a rally, maybe even getting back up to this level of resistance, but then an even deeper dive, a candle close before a rally. That would set up bullish RSI divergence, meaning the price peaks are still going down, but our RSI is going up. This isn't a guarantee. There is a chance we can still play with these two levels, but that's not looking very pretty to me on the charts. I do think, especially with all the news coming out of the Fed, with inflation, we kind of had a clear the charts type of situation. We need to restart over and wait for bullish RSI divergence unless, and we're going to talk about this here in the second part of the show, unless this whole situation that we had right here is a black swan event. Now, some of you guys have heard what that is. We're going to go into details about what a black swan event is. We're going to discuss whether it is one based off of the definition or if it's just normal charts, and we'll tell you what the implications of it being one or it not being one would be. But as it stands right now, I don't believe that this is the bottom, at least in time frame, if not price. There's a good chance both bottoms end up coming later, both in time and in price. However, let's continue with this narrative. I do believe that the rally is coming soon. And let's pull up our Lux Algo. For those of you who don't have Lux Algo, it is a phenomenal tool. I love using traditional technical analysis along with it, but it is a phenomenal tool I use in every single one of my trades, every single one of my investment points, and it is telling us some amazing things right now. One of the coolest tools it has is these new ones that just came out. Like if you just got Lux Algo, if you had Lux Algo for a while ago, you need to make sure you update your Lux Algo because they are helping traders by actually giving you points to take profit and stop losses. And right now on the daily chart, we have broken through our first level of take profit. So those of you who are shorting, if you were using Lux Algo, this would be a great time to take your profit. Of course, the wick came all the way down to 20,900. That would have been really good, but it's still a great spot to take your profit as we start to rally. Same thing on the weekly chart. As we get in bigger time frames, this to me is another confirmation that we're going to be reversing, because it's actually even worse. We dropped below the strong level of take profit on the weekly chart. There's a lot of pressure actually right now for the bulls to be able to push the price back up. This is a lot of anticipation. In my belief, I believe this price dip is a lot of anticipation that the Fed is going to come out with a 75 basis point hike. We're talking about that more in the second segment, so I'm not going to go too much into that right now. But if that's the case, the price is baked into the chart already. There's a lot of reasons to believe that the bears pushed a little too far, a little too hard, similar to, again, game of tug of war. Sometimes you pull too hard and you start to lose your balance, you lose your feet, and you slip, and now the other side can pull back. I do believe we might be seeing that happen. Not saying this is the bottom or that we're not going to come back down again, but I do believe for right now, the bears are starting to lose some momentum. The bulls are going to have a lot of strength to be able to come back in the space and reverse it. It's the same thing when you go down to the 4-hourly chart. You're going to see a lot of things. I told you guys, TD sequential. We're overextended the Bollinger Bands. We have take profit levels on our Lux Algo. We had a 9 flash way back here, like a long amount. Like, how many candles is that? I'm going to show you guys real quick. To right now, this was 16. So what is 16 times 4? Quick math on that one. Do you know what that is, T-Shroom?
I'm looking it up right now.
Man.
16 times 4 is equal to 64.
64. So 64 hours. For 64 hours, we have been overextended on TD sequential. Again, not that TD sequential is a perfect indicator, but especially when you're that overextended on it, there's a good case that the bulls can recapture and gain some strength back. So that's what I'm seeing on the charts right now. T-Shroom, do you have any thoughts whatsoever about what you're seeing on Bitcoin chart or any other chart that you'd love to give a little bit of information on?
Yeah, you don't need to hop to my chart too quickly. I think when I'm watching your analysis, Tim, I think it's really good. I think you're definitely in the details to a sufficient point, but you're also not getting bogged down and letting that consume you to the point where you don't look at the bigger landscape of the fundamentals, right? And even other markets such as the stock market. So I think that that's really good. I like what you're looking at. I personally don't think that we're going to come back up anytime soon and test higher. I know that that's a narrative you really like. I think it's possible. Anything can happen. I think if we are going to go up, it's going to be nonstop. I think that at that point it's going to be a very significant moment, and we're going to be talking about that a little bit more. But I personally think we're not going to go up. I think we're going to continue to test lower and then trade sideways through September. But that's based on more of like fundamental. Rather than technical analysis. If you go to my chart, just briefly, I'll show you a little bit of what I've been looking at, and that's just this that Jebb continues to look at, which is this 200-day simple moving average, and it, in the past, it's been predictive of bottoms here and here. And now we're touching that and tickling it again. I think that I've seen in the chat today someone was saying that Bitcoin has never seen a financial crisis. I suppose that's true if you're considering 2008 to be the last financial crisis. We've had some similar things through the pandemic, but perhaps that is correct. So if we are seeing a financial crisis right now, a massive deleveraging event as the Fed pulls out of its bond buying program through QE, and it continues to hike rates and inflation is unresponsive, that would absolutely qualify as a financial crisis. And we could potentially see Bitcoin push low. I don't know if you're still on my screen, but you could potentially see Bitcoin push lower through here. And all those drawings just came back. Hope you didn't get spooked by all those blue lines, but you could see it push through here. I'm going. It shows down to 12. I don't think it's going to go down to 12 necessarily. But so I've seen where it could come back down to as low as like 15 or potentially 18. At that point, it's like it's really scary, and there's going to be a lot of folks shaken out of the market. Am I looking to sell at those levels? I'm not looking to sell Bitcoin. I'm looking to buy Bitcoin. The lower it goes, the more opportunity there is. It's kind of mind-numbingly annoying to continue to think about it like that, in the sense that but you're losing money, you're losing dollars, dollar value. The lower the Bitcoin goes, I get it, I really do, but I'm convinced. I'm utterly orange-pilled, as they say. At this point, that's just the way that I think, and the lower it goes, the more I'll buy. So So I'm not super scared by it going lower than 20. I think if you consider what we're going to talk about today with the Fed rates, I think it's very much in the cards that Bitcoin will go lower than 20. And that's going to have negative implications for companies like MicroStrategy's, who have some options contracts that could get liquidated potentially if it goes that low. I'm sure that they have some other tricks up their sleeve, but I'm not in Bitcoin because of Michael Saylor. I'm not in Bitcoin because of MicroStrategy's. They've been a huge leader in the space, in the crypto space, specifically Bitcoin. But they're not the end all be all when it comes to crypto. Ultimately, it comes to the Shaw algorithm. It comes down to blockchain technology. It comes down to my certainty and my convictions around Bitcoin as a superior currency to what exists. So that's my TA analysis. Wasn't very TA, but there was a little bit in there. Tim, back to you.
Yeah, and I really appreciate even that take right there. There's you never know what's going to happen. Absolutely, we can go lower. But the reason why I believe that we're going to be going, I think that we're going to see a relief rally beforehand. First of all, as I mentioned before, we might see a 75 basis point increase. And again, we're going to talk about that here in like 10 minutes. But this price is kind of baked in. This is a lot of anticipation of 75 basis points. When we saw those numbers, like if this dip had happened before the CME numbers came out, then I think there's a case to say, hey, this is part of what the price was going to do. But us dropping down here this fast, literally right after the numbers came out, means that this was an anticipation. When people saw those numbers, the fear started to get into the market. The fear and greed index, if you're on my screen right here, Jebb, Smay, we're down to 8 again. We're down to fear. I talked about this when we saw this price dip. I said, watch the fear start to crash. Now, remember, when we're looking at this indicator, because fear and greed index is an indicator, the average trader sees an 8 on fear and greed index, and what they should be thinking is, wow, it is time to buy. Wow, we are overextended to the downside. Wow, I want to buy when everyone else seems to be afraid. And of course, that is a great indicator right there. But going back to the charts even, how many times in a couple of these sideways to the right and up, in these markets have we kind of been flooded out and FOMO'd at particular times? As we were dipping right here, I remember the sentiment back in January of this year. We didn't think that we were going to bottom out at 33. We thought we were going to continue to go down. People were calling for 25,000. And guess what? 25,000 ended up coming, but it didn't happen just yet. We actually had a little relief rally. And as we're climbing up, people are like, oh, it's all right, guys. We're good. We're going back to all-time high. But then, of course, we fell again. And there was this constant FOMO and flood out of the market till finally we hit our head around 48,000, and then we had a slow decline before a massive dip down to 25.5, right? We had the same thing kind of happen over here last summer, where we had a massive dip. We dipped down into technically didn't quite get down to the 20s, but we were right there at 30,000, and people were calling for a 20,000, 5,000. People, the bears came out of the woodworks, and they were like, guys, we are crashing hard. We're going down to 5,000. But then we had a relief rally, and then we started to fall, and then we started to rally, and we started to fall. I believe a very similar thing is going to happen here. Again, I told you guys, I don't even think this is the bottom. I definitely don't think it's the bottom in terms of the time frame, but I also don't think it's the bottom in terms of price. However, for those of you who are waiting for a lower thing to buy, I'm not saying buy right now. You don't have to. I think you could wait, but you might be waiting here for a little bit. You might be waiting for at least a couple of days, if not a couple of weeks, for that price to actually get lower, because I do think right now, with all that volume, with all the other indicators I showed you, we're going to see a small relief rally, and maybe we only come back up into the higher 20s, but I do believe we can get back into the 30s before we end up dipping back down, at least back down to 21,000, if not a little bit lower. However, we'll talk about that more in the future. It is time to go and transition. We're going to start with some super chats. Do we have any super chats in the chat?
We
here,
have
T-Shirt?
some chats that I think are important to
Perfect.
bring up.
Let's do it.
We do not have any super chats as far as I saw.
That's fine.
But yeah, so we've got a couple. The first one that we want to get into is Rudy Poo. He brought up the question. We want Celsius news, and I have seen that in the chat all throughout. And if I could give just a short answer, but Tim, I'll get your input as well if you'd like. The short answer, Celsius was really yesterday's news. There have been some investigatory developments, but really the pen hasn't dropped with Celsius yet. The overall, what you need to take away with Celsius is that it's emerged now that there is significant counterparty risk with crypto. It doesn't mean that the underlying technology of crypto, the blockchain, is compromised or even compromisable. It's impossible to compromise. But the counterparty risk, meaning the brokerages, Celsius, FTX, Coinbase, they still do present a risk. But that's always been the case.
Yeah.
We've known that from the GME days with Robinhood. Similar things happen. This is also happening with Binance right now. Not the exact same thing, but something similar. With Binance, it was because their fees are actually so low, people are able to get out very quickly, and there was just a jam on Binance, and it was their technical. It was actually their code that restricted withdrawals for like an hour or something like that, and so that one wasn't. It wasn't like their CEO ordered a pause or a halt on withdrawal, where in the case of Celsius, the CEO actually did order a halt. And that's because their terms and agreements give them that authority to do that.
Yeah.
I don't think that that they're acting outside of the law here. In everything I've understood about it. Now, there may be more developments that have dropped since this stream started. Obviously, we couldn't cover that in real time. But as far as we know, this is something that parties, it's a counterparty risk story, meaning there is still counterparty risk, and if you're on Celsius, you don't like what's happening, you can't withdraw your Bitcoin. Maybe you shouldn't be on Celsius. Maybe you should spread your wealth around multiple exchanges. That's kind of the answer there.
Yeah.
Hopefully that suffices the folks in the chat who really want Celsius news. That's what I'm seeing. Okay.
And I think it's really important there. The takeaway from that is to really do your due diligence on the exchanges you're using. And again, there are some people who definitely should be using exchanges because they could not handle having the money in their own wallet. This is actually something Matt C and I talked about when I was at Consensus with him. And we're probably going to produce a video and content for you guys to understand this. But Charles Hoskinson even said this in one of his interviews. He said there are some people out there who cannot handle having their own money. Some of you guys might be wondering what that means, because of course decentralization, DeFi, the whole point is that you take the money out of a centralized system and now you have control of it. But guess what? There's positives to having control over your own keys and having control over your money, but there's also negatives. What happens if something happens to you? What happens if you get in a car accident and go into a coma, and then you wake up and you lose your memory? That's called, I'm blanking on what that's called, amnesia. So let's say you have amnesia and you forget your keys. That money is now lost forever. Let's say, again, there's situations where whether you are a man or woman, you understand how to use crypto. You understand how to access your keys in your cold wallets. And guys, you should use cold wallets. If you don't have one, make sure you get one. But if you don't understand what's happening there and your family doesn't understand what's happening there, what happens if you die and you left a set of keys behind, but their family or whoever you left that money to has no idea how to access it? That crypto is gone. So you need to do your research on exchanges. You need to make sure you're putting in a right one. If you have the knowledge and you have all the things put in place to protect you and your family from losing it, don't even use an exchange. Purchase and then get it over into a cold wallet immediately, so that when we have hard crashes or when we have really good raises, we don't have exchanges shutting you down from either taking your profit or buying in. You want to make sure you have control over that. But some people aren't in that spot. They need to use these centralized exchanges in the same way they need a bank currently to handle their money, because they couldn't handle their money themselves. You got to know who you are. We encourage you to continue to do your own research. But especially when it comes to exchanges, if you're the person who says, Tim, no, I don't think I could, understand and process having my own keys right now. I think that's too dangerous for me and my family. You're going to need an exchange. But these are some of the downsides that come with centralized exchanges. You want to make sure you're in the right one. And I'm going to be honest with you guys, there is no such thing as a perfect exchange. That's, every single one has had a problem. The one that I like and I have some money still in is Coinbase. But even Coinbase has had some problems in recent history. So you need to continue to update and educate yourself so that you can be the type of person who ends up moving into a cold wallet and you control your own keys. I hope that kind of answers that question for you guys. Again, that Celsius thing, yeah, I'm really sad for anyone who is there. Do your due diligence. I think Celsius is going to be, we talked about this, Celsius is going to be one of the coins that probably might not make it through the through the bear market because of stories like this. And this is the absolute worst time to have problems. You will lose trust for forever. So we'll see. Yeah. We'll see how that one plays out.
Yeah, and just a quick, this was Celsius's response. Due to extreme market conditions, today we are announcing that Celsius is pausing withdrawal and swapping and transfers between accounts. We are taking this action today to put Celsius in a better position to honor over time its withdrawal obligations. So, the coverage I'm reading around this is that Celsius is very quickly putting itself in the similar category as Luna, because what they've done is they've put their terms and agreements allowed them to have more custody agency over the funds that you're putting on their exchange, right? So they were taking those funds and staking them on the Lido exchange. which is a legitimate exchange, but that's not an action that happens on other exchanges. Correct me if I'm wrong. I don't believe that happens with Robinhood or Coinbase or even Binance or FTX. May you have a correction on that? No. Okay. So that, I think we've covered as much as we're going to cover on Celsius. We might see some breaking news that we'll cover later on, but other folks are asking, are they going to get their funds back? That just kind of comes down to what Celsius tweets, and they haven't issued any more guidance on that to this hour. Now, that more than likely they will in the next 2 days. They will issue some kind of guidance on how that's going to get distributed. But the fact of the matter is this isn't the same situation as Terra Luna, because their underlying stock or their underlying coin hasn't gone to zero in the same way.
Yeah, it's just going to be a branding liability, though.
Yeah.
Let's go ahead and transition, though. We're going to go into our second segment. But first, I told you guys another word from one of our sponsors, and thank you so much for allowing us to be able to come on here every single day and do the show. So a shout out to Link2. But in case you guys didn't know what Link2 was, it's a really cool company. Right now, a lot of people are looking at crypto. Some people are wanting to get out of it. But those of you who know what's up, you're looking right now as golden opportunities to invest definitely in Bitcoin, but you're also looking at other altcoins. But hey, this is also a time to start investing in companies, because it's not like crypto is going to be the only thing in the future. We do believe crypto is the future, but there's some companies that are really cool to invest in as well. But when they are privatized, it's really hard to invest in them. It's almost like this locked off version where you have to be this multi-billionaire to even get a shot at investing in these companies while they're private. But what's really cool about Link2 is they allow the everyday person to actually invest in companies while they're private. And we're not just talking about little companies that have just started. We're talking about companies that have an valuation of over $1 billion. These are solid companies. Some of these in the past have been like Coinbase. They've been like Ripple. But what's cool about Link2 is they allow the everyday individual to actually invest in those companies at the low levels and watch your increase come. So if you don't already have Link2, make sure, go to the link in the description down below, sign up with us, start investing today in these companies. I know there's pain. I know there's a lot of people saying, Tim, I don't want to invest money. Guess what? If you can learn to take emotion out of it, right now you will see in hindsight is the best time to be investing. Even if this isn't the perfect bottom, we are so low, it's the best time to start DCAing, start investing, operate like the whales and institutions, the people that buy when there's blood in the streets. Guess what? This is the definition of blood in the streets. It's the right time to do it, and you can do that in companies that will build things in crypto. So that's what I advise you guys to do. Again, link in the description below. Let's go ahead and jump into our second segment. I told you guys, kind of teased at what we were talking about. Real quickly, though, I know Smay's waving his hand at me. We're looking right now. Thank you so much, everyone who's in here. We have 2,100 people watching. However, we only have 484 likes. We can definitely get that number up right now as we're speaking. I believe that we could jump all the way up to, just Smay, what do you think, 1,300? 1,300 likes?
I think we can jump all the way up to 1,500.
1,500.
1,500.
Come on. What a task. Take the challenge, guys. Hit that like button. It's absolutely free. There's literally no pain. Even if you don't like us, you can just hit the like button and just be a nice person. Helps us in the algorithm. Helps us get out there.
Costs you nothing.
Costs you absolutely nothing. But let's go ahead and jump into what we're talking about. And that is, again, some of you guys are not going to like this. Some of you guys are going to think this is wrong. And I really want to open up to you guys in chat, in discussion. I want to hear your feedback on this. But the big idea of today's show is that if, this keyword, if there is a black swan event, we could see the Fed overcorrect, which could trigger a buying frenzy into Bitcoin and gold. So there's a couple points we got to break down here. First of all, is this a black swan event? We're going to cover that here in a little bit, but let's say it was. Will we see the Fed tomorrow give an overcorrection that could domino effect into where people are actually massively moving into Bitcoin, into gold to get away from the US dollar? Because even though these high interest rates are going to bring power back to the US dollar, it is going to hurt the people. Are people fed up with the money and they're going to start transitioning into things like Bitcoin? That's something we have to kind of look at. But some things we got to keep in mind as we lead into tomorrow, as we wait for the Fed's announcement. We gotta weigh some things here, because last month, and I talked about this when we did the live show, we covered Powell's take. I was actually pretty upset with Powell. Why was I upset with Powell? Is because what is happening right now is a direct indication of what his remarks were. He came out, not only did he not jump to 75 basis points and get ahead of this thing early, he led the everyday person to believe, the everyday investor to believe, guys, do not even worry about 75 basis points. I'm going to need to see months of data, months before I even consider that. For right now, 50 basis points is all that we need, right? This was actually a relief to the market. We saw a short-term rally before, of course, the Bank of England came out the next day with their remarks, in which case they were super hawkish. And then, of course, the price crashed. But his remarks were dangerous for the people, and here is why. Because he gave people this thought that do not worry, we will not go higher than 50 basis points. But of right now, we haven't heard from his mouth, so I want to hear from him. Right now, almost every single person, 92%, 94% of people who are invested in our economic gurus, they are predicting that we will see a 75 basis point hike tomorrow. If I go over here to this, what is this called? It's called the what's this metric called?
Yeah, it's the CME futures.
CME futures, right here. This is what we're looking at right here. You guys are going to see 150 to 175. What that means is 75 basis point increase. We're already sitting at 1. That means we're going up to 75. There's a 91.6% chance right there. And then 25 to 50, which what that means is it's 50. There's an 8% chance. These are the people kind of predicting this. Right now, the experts are predicting 75 basis points. This goes directly against what Jerome Powell said. When he said, when literally there was a question saying, will you guys be doing 75 basis points here in the next month or so? And his answer was no. We're going to need to see months of data to realize if there's even a cause for that. And that gave this almost relaxation, this okay, we're good. We don't have to worry about an increased interest rate too much for right now. And of course, now what we're looking at with the historic all-time high of inflation rates, what we're looking at with all this fear pumping in the market, the dollar's becoming more and more every single day worthless. Now there's almost this pressure of he has to. So is he going to come out with 50 basis point and stick to his word, in which case he's not being aggressive enough to actually curb inflation, or is he going to go back on his word and have lied to us and after 1 month go ahead and jump us up to 75 basis points? This is really big. And T-Shum, I want to throw it to you. Is there anything else we need to cover there, or is that kind of sum up what we're sitting at right now as we lead into tomorrow's announcement?
Yeah, I mean, that's a good summary. Just one more indicator that it'll be at 75. If you go to my screen, I've got it pulled up. There's a CNBC article kind of going over Fed likely to boost interest rate by 3/4, 75%, 75 basis points of a point this week. So, and they're also looking at bond yields. So bond yields pointed to the possibility of a more aggressive Fed as the yield on the 10-year shot up 3.37, while the 2-year, which is most closely tracked Fed intentions, accelerated 3.34. So that's where you start. You can leave my screen. That's where you start to get into the phrase you may have heard, the inverted bond yield curve, right? So, or the inverted bond curve, and that's I believe it's a recessionary indicator as well. But that basically means that people see more potential in the future than in the present, and so that has a negative effect, and that's a signal. Most importantly for us, that's a signal of what is to come with this rate hike. So the bond yields are also predictive in the same way that the CME futures are predictive. It's the market, putting their money where their mouth is with their predictions and actually buying assets that will appreciate based on their predictions. And they're all predicting the same thing, is that the Fed is going to come out with 675 basis point hike, which is something we've been talking about. I will point out that I actually predicted that they should front load. I guess it's not really a prediction. I recommended that they should front load these hikes, right? So they started off with 50, and then they are now going to more than likely do 75, not only in June but also in July. And if they continue to do that, then they can get a lot of the hard work done in a small point of time, where it will be high pain point. There'll be a lot of selling, a lot of blood in the streets, but then they won't have to do that for a prolonged period of time. So they can go ahead and provide some relief to the market and start to cultivate a relief. I wouldn't say rally, but a relief resumption upwards, and CNBC and Market Watch and Wall Street Journal can start to make arguments again for buying for the long term and provide some relief and stability to the stock market, which, as we know, is the NASDAQ at least. Bitcoin has coupled itself to the NASDAQ, so it pours over into crypto. But hopefully, and we're about to talk about this in a second, hopefully that decoupling will end soon.
Well, I think another interesting thing is something you've mentioned before, T-Shroom, is collecting my thoughts here real quick. As we're starting to see them do this, is this simply their response to to actually try to get some positivity when we come to these midterm elections. That they lost control of it, but now they're going to try to front load right now. And again, this isn't front load. They should have started this a month ago. But maybe as we're starting into midterm elections, they can lower the interest rate to potentially then say, look, guys, we're actually fixing the economy. We're able to go lower interest rate. This is less pressure on you. Vote for us again.
Absolutely. So if you go to my screen, it's a great question. If you go to my screen, so you can see these are. We're not looking at the European Central Bank, but I do have it up on my screen if you wanted to take a look at that as well. But you have, so the beginning of the year through the end of the year here. Right now, obviously, we're in June 15th. This is tomorrow. This is the Fed decision is tomorrow. And then the press briefing tomorrow, we are going to be going live at 2:10 Eastern time to provide coverage of this massive event that has a lot to do with our economy and certainly with crypto. But so we've got 1, 2, 3 decisions before November 8th, which November 8th is the election. So what we're considering is it makes sense to them. It makes sense to the Fed, who I don't think has, you can stay on the screen. I don't think that the Fed has a nefarious, ultra-partisan agenda. I think that just generally the Fed wants to kind of stay in line with the White House. I don't think that there's some kind of economic cabal going on between the White House and the Fed. I think that they kind of want to run in tandem more than they don't, right? And so what that would lead to is a 75% rate hike in June, a 75 in July, and then another 75 potentially in September. And then by the time they come to November, they can have released so much rhetoric that they're going to go back to 25, or they're not even going to do a rate hike, or they're going to go back to 50. So then that brings a thawing sentiment back to the stock market and to markets generally, where they start to have a little bit more optimism towards the Fed and the monetary policy, and you can start to see that interest rate kind of level off and plateau for a while, rather than continue to hike and continue to make money more expensive than making higher risk assets less appealing because of the cost of trying to chase those higher returns.
Yeah, and I think the other thing to make sure people understand is we're also going to see them get caught between a rock and a hard place, because they have been applying Keynesian economics. And guess when we're looking at two things right now. We're watching ourselves head into a recession. Guess what Keynesian economics says when you hit in a recession, what you should do? Lower the interest rate. Well, inflation is sitting at all-time high. What are you supposed to do when inflation is all-time high? You're supposed to raise the interest rate. They're going to get caught right here between a rock and a hard place, which kind of transition us into the whole thing of why does this matter? Even when we're looking at the charts, why does this matter? What are we seeing happen? And I want to pose this question. I told you guys I want to hear in chat what you guys should think. There is a case that potentially we could be seeing a bottom, whether it's right now or happening very soon, and that is if it is a black swan event. And I'm going to cover what a black swan event is, because I know a lot of you guys have heard that, but maybe you don't know exactly what defines a black swan. When do we know something is a black swan event versus when it's not a black swan event? But there's a significance here, and I want to set that significance up. The first thing is that if this is a black swan event, remember when I said before the volume is high, the RSI is not sitting in the place where we really have bullish RSI divergence? Well, guess what? The one time in history Bitcoin did not wait for bullish RSI divergence or wait for low volume to be at spring was a black swan event in the pandemic. If this is a black swan event, then this could actually be the time period of a bottom where we've baked in price from really hard things, but then we're going to see the price go up. I'm not saying that's necessarily what's going to happen, but there is a chance that black swan event, we're not waiting for the bullish RSI or the low volume. We actually could see this massive dip coming in effect, and that be the spark for a lot of whales institutions to buy in. And again, had that Bitcoin moment, they're looking at the US dollar just fail over and over and over again. They're seeing the recession come in and say, it's time to evade this US dollar. But if this is not a black swan event, that is the reason why I do believe we could see these prices dip down to this level, if not lower, once again. So if that's the significance, let's ask the question, what is a black swan event? Some of you might know this, some of you might not, but there's 3 keys to a black swan event, and we're going to cover them. And there's 2 of them that are very obvious. We are in that. If that's the definition of black swan event, we are in one. But there's one that is up for debate and on the table, and it's the first one. So the 3 are: the financial event is mostly unpredictable. That is the one that's in question right now. We're going to come back to that here in a second, but these other 2 are definitely in play. The financial event has a widespread impact. Well, boom, the stock market is down, Bitcoin is down, crypto is crashing. We definitely have checked that box. And the third box, investors rationalize the event in what is called hindsight bias, which makes it seem as if the event was predictable. So of course, every single time we can just go back and say, oh, we crashed because of the numbers that came out. We crashed because of how the Fed responded. We crashed because of the war in Ukraine. We crashed because those last two are definitely in play. We have those two boxes checked for a black swan event. The question is this financial event unpredictable? And I know it's easy to say, well, we can predict this. Back when we had the first black swan event, this is kind of the second wave of that same black swan event, when we were giving out all those checks, the United States was just bailing people out by sending these massive checks to people. Some of them needed it. Some of them absolutely did not need it. But we put ourselves into massive debt. We printed money. You could say, oh, no, we predicted that at some point inflation was going to rise and that the Fed was going to have to deal with this. The question, though, is, did we respond to it? Did we think it was going to get this high? That's the point here. Again, if we had had price dips just baked into the market before we ever saw inflation numbers or before we even saw the Fed's response, then I think there could be an argument to be made that, no, this was baked in. We knew this was happening. This is not unprecedented. This was not unpredicted. This is actually what we expected. However, most of these dips have come out after reports come out, meaning while we knew inflation was coming, while we knew the Fed was going to have to do something, we were surprised by the degree. So I think there's actually a very valid argument in play right now that what we're seeing right now is a black swan event. Now, I want to discuss this with T. Shroom. I even want to hear what Smay thinks, and I want to see what chat thinks as well. But what are your thoughts, T. Shroom, about those definitions of a black swan event? Do you think we're actually in one right now, or do you think we don't check that first box?
Yeah, I think it's a really good question, Tim. I think that I don't think it was unpredictable. I think it's and this is why. I think obviously the pandemic was unpredictable, but it's almost like the Fed has used a judo move and it's taken all of the negative energy from the pandemic, all the lives lost during the pandemic, all the people not going to their jobs and quitting, all of the federal fiscal spending, right? And all that had to happen. And then finally, everything that just happened during the pandemic that was negative, right? Especially the Fed printing, right? That's what they did to essentially do this judo move, which is taking all the negative energy from the pandemic and then delaying it, and now they're pushing it towards the present, which is right now. And so I think it's been predictable in the sense that it should have happened then. Like the pandemic itself wasn't predictable, but now it's predictable because they've delayed it so long. And investors have seen how it was supposed to play out. It didn't play out like that because the Fed pumped the market so much and it just kept going up. But now we have to pay the piper, right? The time has come, and so it's gone from a non-predictable event to now a predictable event because the Fed issues monthly, as we know, their guidance on how they're going to decide. And so now they're saying, okay, all that negative energy from the pandemic that we've bottled up through our bond buying policy and everything else that we're doing. Now we're going to slowly release that, and we're going to see what happens. And people have said this has never happened before. I think something similar has happened like this before, but it's certainly very, very scary. So in that, you kind of tracking that, Tim, does that make sense? Where I think it started off as unpredictable, but the Fed kind of did like this judo move where they used its own energy against it for a while and were able to preserve stock prices essentially, but now they're going to release it, and who knows what's going to happen, and it's probably not going to be good.
Real quick, I'm going to hear Smay. What are your thoughts on what you're seeing here? Do you think that this was very predictable, or do you see there was a little bit of unpredictability about this?
Well, I mean, it's funny because what T-Shroom said was basically exactly what I was going to say. Yeah. I think this is predictable in the fact that this was, it depends on how you define it, but I think this is just exactly resulting from the pandemic. I think what we're going through right now is just the delayed effects, because there was so much of this kind of like Band-Aid approach of like trying to cover up the pain that people felt back in 2020, that now this is everyone who was in the financial markets kind of saw this coming, in the fact that they were like, as soon as the pandemic happened, they were like, oh, you have these ginormous stimulus packages, I think it was at that point you're like, yeah, all right, something like this is on its way. We're going to feel this kind of inflation. We're going to feel this kind of negative impact. The supply chain issues, we're going to feel that soon. And now this is where we're at. We're feeling the effects of all of that. So yeah, ultimately, I think it was predictable in the fact that it's a result of the pandemic. But if we're saying that because the pandemic was unpredictable, that could define what this is as just an extension of that black swan event.
And I think it was really key. Remember that third point I said there is that investors rationalize the event in what is called hindsight bias, which makes it seem as if the event was predictable. So I think that I'm kind of sitting on the fence here because, again, I do think we knew months ago that there was going to be a response to all that. So we knew a year ago there was going to be a response. 2 years ago, already, when you're getting those checks, you knew someday we're going to have to pay for it. Where I'm kind of sitting on the fence that this potentially could be a black swan event is the fact that I don't think that people fully knew how bad it was going to be. It's really easy to look back in hindsight and say, oh, yeah, we knew it was going to be this big of an impact. We knew it was going to be this hard of a crash. But bears, there are certain bears that are always saying we're going to crash. We could have everything fundamentally good, the economy's good, and there are still bears going to be out there saying we're crashing down to 20,000, we're crashing to 5,000. What I think that is happening right now potentially is we are playing out maybe not a major black swan event, but a minor one where, again, the news keeps coming out worse than what we expected and the price ends up crashing because of it. But here's what I'm going to leave it at. I think this is one for each individual to kind of chew on, do your own research, present and have your own opinion on the market. But remember, if it is a black swan event, we will confirm it based off of this actually might be the bottom, or we will see a bottom with very high volume. We will not have bullish RSI divergence. The charts won't play out the way the traders meant for them to play, but rather there's a very quick dip before a nice rally with a golden buying opportunity. That signifies this was in fact a black swan event. Or will we actually have that little rally, come back down to these same levels again here in the next couple of weeks? To me, that would then indicate this was not a black swan event. And I know people want to know for certain, when is the bottom? How is the bottom happening? What is the price exactly? That is not an answer that anyone in the entire world could give you. It is up to you to continue to watch the charts, to look at the news, to look at the fundamentals, and make that decision for yourself. So as we kind of wrap this up here, what is the takeaway of what you guys can be doing with this? Let's watch tomorrow. You guys know we've announced this yesterday, but in case you weren't here, tomorrow at 2:10, we and our team, we are going to be going live to not only discuss what those numbers look like, because the numbers come out at 2 p.m. Eastern Standard Time. We'll discuss the numbers and our opinions, but then we'll watch live with you guys as Jerome Powell not only gives his report, but then also answers questions, because to me, I believe that's where the most information will come out when people ask him the hard questions and he's forced to respond. I'm very interested to hear how Powell responds and what it looks like the future is going to be. Make sure you join us live tomorrow at 2:10 Eastern Standard Time as we watch that together. But let's go ahead and transition. We got super chats. Let's do it. I know I saw a couple super chats come in. Let's go ahead and read those. And then we have our HODL Trophy predictions for this Friday. This is going to be a hard one. This is a very, very hard one to predict, especially because we don't know what Powell's going to say tomorrow. But we got to make that prediction anyway. It is Tuesday. What are our chats over looking like, T-Shroom?
Absolutely. So we've got one, Sin City Crypto donated $2 and said, smash the likes. Sup, guys? And
Boom.
That was a lot of fun. And then Crypto Sec Guy donated $5 and said, no matter what prices go to, your life is more important than any amount of money in the world. Please call or talk to someone if you are in need.
That's true. 100%. You know, that's something we're really big on this channel. Guys, we're going to come to you every single day to let you guys know what's happening on the charts, try to help you make some money as well. But guess what? Money is not worth it if you do not have mental health, financial health, physical health. We are much more about making the person that makes the money a healthy person. And when you are healthy, you'll be able to make some money. But if that's not you, please reach out today. Do not let your emotions swing you from left to right, up and down based off how the chart is doing. That is not a state of mental health if you're doing good on the green days and bad on the red days. Please, please, please reach out and get support so that you become a healthy person. And I promise you, when you are healthy, it clears your mind, it clears your ability to make good financial decisions. And that's what we're all about, financial sovereignty. You having control over your money, not your money having control over you. Well, let's go ahead and transition. I think, Smay, did you win last week on the HODL Trophy, or was it Jebb?
I won.
Boom.
I mean,
so that means you get to vote first on what you think
yes,
Bitcoin's going to be.
Yes. All right. I'm going to summon help from the names that decorate the HODL Trophy. All right. I'm going to predict 19,000 $.
So you think we're going down?
I think we're going down.
All right. T-Shroom, I'll let you go second. because you were predicting Jebb, and I think Jebb was in second. I was the last place last week.
As in where it's going to be on
Where
Friday?
do you think Friday the price is going to be?
Well, here's what I think is going to happen. I think today it's going to probably continue to stay around where it's at, and then on the Fed day, I think it's going to stay. It's actually going to come up, and I have some reasons for that. Don't know if we're going to have time to get into it. I think it's going to come up a little bit, but that's going to be a decoy, and it's going to come a bull trap, so to speak, and then it's going to come raging down, probably close to what Smay was saying. But I think by Friday it will have done that. So I'm going to say 18. You said 19, right, Smay?
Wow.
Yeah, I'm going to say 18. I don't want it. I don't.
You know what sucks? I was gonna say 18, but I was like, that just seems really low. So
And it's bittersweet, right? Because obviously I'll continue to be buying, DCAing, and buying the best currency
YOLO
that ever
so much
existed.
money.
This makes my job really easy for this prediction. I
just
wanted to go higher, but I'm gonna. Last week I went against. I would have won last week, I think, if I had done my original strategy. I didn't do my strategy. I went a little higher, and I lost because of it. So therefore, I'm gonna go ahead and use my strategy. I'm gonna say 20,000. So I get everything above 20,000. That's easy pickings for me. I believe we're gonna maybe see a price closer to 25, 26. I do believe that we're gonna see a short rally. Again, I told you, I'm not saying this is the bottom. I think we're going to rally, and then we're gonna dip back down again. T. Shroom is saying the same thing, only he's predicting that we're gonna see that little bull trap happen within the next couple of days. I don't think it'll happen. Remember, things don't happen as quickly as we think they're going to happen. I think we're going to see an elongated rally before it dip back down to these levels, if not lower. So
I actually,
easy pick'ems for me, 20,000.
I'll be honest with you. The reason why I actually am team T-Shroom on this one, in the fact that the reason why I say it's going to go that low is because I think what's going to happen tomorrow with the Fed decision, I think it's going to be something that people didn't predict, and it's going to crash. That's what I think is going to happen.
That's absolutely true, Smay. Yeah. And I'll tell you why, because these CME future predictions that we showed, that 90% of folks that think that we're going to have a 75% rate hike, those didn't come in until Monday. So all throughout the weekend and previously, everybody was thinking 50. And I was hearing CNBC reports like taking that as it was gold, it was truth, right? Monday is only, like that was yesterday. Like these big institutions that move money, they make those decisions based on months of analysis. So they're now having to, at the very least, pivot. And it's going to be blood in the streets, folks.
Yeah,
and
I think there's going to be a big crash.
I think it's going to be big.
We'll see. Let us know in chat and in the comments who you think is right. We got T-Shroom with the lowest prediction of 18,000. Smay's right beneath him, or right above him rather, at 19,000. And if I'm saying 20,000, I think it's going to be a little higher than that, but I'm going to go ahead and secure that slot so everything above me I win. Let me know what you guys think. We will see you guys, though, tomorrow once again. We have an afternoon video coming out today, but we will be back with Coffee and Crypto live tomorrow. You don't want to miss it. Tomorrow is the day, guys. The Fed announcement comes out. What are we going to see? Is it going to stay conservative at 50 basis points? Are we going hawkish with 75? And what does the future look like coming straight from Powell's mouth? Maybe you can believe it. Maybe you won't at this point. I don't know what comes out of his mouth is believable and what's not. We will find out, though, tomorrow. Love all of you guys. I will see you in the next video. Peace.